start to FY23 by Eicher Motors with highest ever revenue and operating profit for Royal Enfield, driven by strong demand and new launches. The outlook is positive, driven by pent-up demand for motorcycles, preference for premium bikes, sharp momentum in exports, significant growth in the CV segment, and an improvement in fleet utilization. Despite supply-side constraints, Royal Enfield registered flattish volume growth on a quarter-on-quarter basis, given pent-up demand, preference for premiumization, and higher exports. Despite significant commodity-linked cost pressure, its EBITDA margin expanded close to 63 basis points QoQ, led by a higher mix of export in the overall volume, price hikes, and focus on yield improvement. Important to mention that the company has expanded market share in 125cc plus segment by 310 basis points in Q1 FY23 compared to Q4 FY22 and has become the #1 player in the segment. The performance of VECV meanwhile remained in line QoQ, with volume declining by 13% and EBITDA margin contracting by 144 bps due to raw material price challenges. Management has highlighted that supply chain constraints due to shortage of semiconductors are easing and the situation is only expected to improve going forward. It mentioned that demand momentum remains strong and the company continues to have a very healthy order book. Inquiry and booking rates for its new Meteor and the new Classic are very encouraging. It's interesting to note that there has been significant growth in export volumes, which grew 30% QoQ and 60% YoY in Q1, and the company continues to focus on expanding its network. It currently has 850 outlets, including multi-brand outlets. Management is very confident on the performance from export markets going forward. New products will continue to be a key growth driver, and the company has the highest number of new products in the pipeline for the current fiscal year. In fact, the company has just launched Hunter 350 with accessible price points. The launch event saw significant traction and the management expects to witness strong momentum in demand for this particular model. Like any other auto manufacturer, the worry for the company is commodity-linked cost pressure. However, operating leverage, cost reduction efforts, they're all helping the company arrest the impact of input prices. Management also indicated that they don't expect any material impact of RM cost increase. Post the pandemic, the first quarter has been very encouraging for VECV. Now, with the complete opening up of the economy, the company believes that demand will continue to improve. Moreover, the outlook for the fiscal is promising on back of normalization of economic activity, improved fleet utilization, resilience in rural demand, and a revival of mining, construction, and highways. In order to increase penetration, the company continues to increase its touch points significantly. It added 29 touch points in Q1 FY23, and they plan to maintain a rate of 2 additional touch points every week. On the back of network expansion, the company has expanded its market share across segments and is confident of maintaining it going ahead. Additionally, remember, VECV launched its first electric bus that was delivered to Chandigarh government for state transport. Our SOTP valuation suggests that the stock is trading at a 20% discount to fair value, and we advise investors to accumulate it for the long haul. Of course, some risks to keep on your watch list would be a weakness in demand, which could hurt financials. Additionally, an adverse commodity price movement could also increase raw material costs and thereby hurt operating profitability.